I wanted to talk to you a little bit today about how the market performed. So this is the S&P 500 in front of me. And if you look at it, today was a really tough day to trade. So there was so much of choppiness, and this is on the hourly time frame. And you could see that the market was just reverbing on itself. It just went up and down, chopped itself. And as you thought, like, okay, I might get in at a good spot thinking the market's going to like start falling down, the market decided to just be choppy. And after being choppy for so long, and these lines that you see on your screen, the blue line that I'm kind of highlighting right now is the 200-day moving average. The purple line is the 50-day moving average line, and the yellow is the 20-day moving average line. So you could see that the time frame, the 200 was respected heavily. It was just choppy because of it, and as soon as it broke out, it decided to step into new territory, and it then moved up to the 4827 mark. Now you would probably be wondering, why did the market just hold still at 3827 mark? And the reason is, now I'm going to open up the 1-day chart to show you what that reason is. So this is the candle for today. And you could notice that the market's moving closer to this huge, gigantic 50-period moving average line. And that is a major resistance zone in terms of what the market considers some kind of a push away from the general direction of the market. Now, there could be times where the market may just kind of like move above it and then move back below. That could possibly happen at any given point of time. Just happened here as well, where the market just turned up and then went again below it. So that could possibly be happening as well, but the market is very respectful of this line, and that's where it decided to hold ground, take a breather over here. And so it's been two strong positive candles since after the 4-day downturn that we've seen there. So you'll probably be now wondering, what is in store? Like, where is this market candlestick heading? And this is me talking to you from a price action perspective. So what's in store is, I'm going to open up the weekly chart now, and you can see on the weekly chart, you have a very significant downturn. I'm just going to go zoom out a little so you see a better picture of where we are. And this is the 20-period moving average line. It's kind of holding its ground on to this line that you don't see here, but the line is the 200-period moving average line. And it crosses it at some point. And this is just because this is the futures market on the micro futures, a different contract. So you don't see it as significantly here, but there is a line. And I think that's what is holding it for a limited period. So the market may come back up to this particular high, and that's the highest it would go. So 3910 is the highest the market could rally if it decides to go all the way up here. Now, if it decides, now this being just Monday, the market may just break through. If it does break through, it's going to head all the way down to the 3588 level. So there's a lot of downturn in store for the market. So don't lose heart if you are stuck in this choppiness that we are kind of experiencing right now, because there is more gain in store for you once we get a more better trend in where the market's heading. So that's my take on the ES, which is the S&P 500. I wanted to quickly also look at a few more micro futures. So I'll first look into the Australian dollar versus the US dollar. So this is the hourly time frame. So it's very positive. It's been moving positive for a few more days now. I'm going to quickly go to the daily chart just to give you some thoughts on where the trend's headed. So the Aussie dollar has been in a decline for a fairly large period of time. And since it has declined to this lows, it has turned to a positive direction, trying to like hover around or be range bound in this zone. So my advice is not to get into the market right now. Just kind of wait it out, see what's in store. Is the market going to turn direction and move downwards, or is it going to hold into this pattern? Keep an eye on it. So not really a good time unless it touches the 50 period moving average, and that could possibly be a good buying zone. A good selling zone. You don't want to buy at this level, but sell and then keep a stop loss just above it, so that you have there's a lot more downward momentum that could happen from it. Now let's just look into the euro. This is again the euro on the daily time frame. Very similar patterns as we've seen in the other chart. It's around the 50 period moving average line, but this is kind of pierced it a couple times. So it may move up, it may move down. I would still not say it's a good time to step into this market, because there is no trend that has been established yet. Same with the British pound. Nothing really to talk about at this stage. Just give it some time. Now, this is the Canadian dollar, and the Canadian dollar has moved, and it's showing you some bit of resistance on the 50 period moving average line. So if it starts declining from your, that could be a good selling opportunity. You're getting it from an area of value, which is a really good place to start shorting your stocks from. So you could use that strategy. Keep your stop loss just above your, but do your own homework as well as you decide on what's the best trade. Does it actually align with your rules and your trading methodologies? Next is crude oil. This is crude oil on the micro futures, and I'm looking at the daily time frame. So the daily time frame for crude oil, it has been on an ascend in the last few weeks, and you've seen like a big rally up here. It took a breather, and now it's going up here again. This is a very important level to keep an eye out for. So it could rally more upwards towards the 94.82 before it could form a double top. And I think this is also a reverse head and shoulders pattern. So you could also have something like that happen, and that's what's taking you to this level. And now it may form a double top or a triple top if you count this 1, 2, 3, and it may then start heading down. So keep an eye on this level. If you are ready to buy, maybe wait for it to kind of go down a little bit more. It seems to be a little overextended. If this is your buying zone, I do not recommend buying at these levels because it's pretty high. Next one is the gold futures. Gold futures steady decline, as we can see. This is on the daily time frame again. Another decline, and now it's moved up to the 50 period moving average line. It is a good buying zone. It is an area of value, in my opinion, that could be leveraged to place a short if you are interested in going short on this, and take it as close to this 1687 mark as you can, with a stop loss just above this particular moving average line. And the reason for that is, if the market decides to break through it, there'll be a bit of resistance as well, but at the same time, you don't lose too much. But there's a lot of downward potential here. So keep an eye on gold. I would say that's one of the good ones that you could potentially get into right now compared to the rest of the lot. There's also something that I've noticed is that gold, oil, and the indexes, which is the S&P 500 and Nasdaq, there was a period of time where there was some alignment in how they were performing, but now there hasn't been such alignment. They've kind of gone their own separate ways, which is a good sign, because otherwise all three would race in the same direction, and there is not enough diversification available if that happens. So that's just my take on that. So now I've got copper, the micro futures for copper. Nothing really to talk about. There's a huge rally here. It's going to decline. I do feel it's going to decline a little more, given like the huge upward trajectory that we've seen, and this very high volume. You could wait it out. I don't think this is too choppy to buy it at. I don't see a trend there except for this huge pullout. Now, what could happen is that it could stabilize itself at a particular value and then again move higher from there. So just be cautious. Not really my cup of tea in getting into. Next is soybean futures. So soybean's been on an upward trend as well. So like there is a positive direction that we've seen, upward trend. If you decide to get into it, like make sure you get in at a good area of value. Don't get this at such a high value, because in case if it falls down, then you lose a lot of money too. So wait for some downward trajectory before deciding to get into this. Next is corn futures. Corn futures is pretty flat right now. Let me just zoom out. Let me see if I can give you a better picture. So yeah, it's been flat. It's touched the 50 period moving average line, which is known to be a good area of value. And if it holds on to it, there could be possible upward momentum from there. So if you see the market changing direction and holding on to this 50 period moving average line, then get into it. Otherwise, it may just break through this line and then head towards the 200 period moving average line. So either or can happen. So keep an eye on it. I see some decline here, but I don't think the market would just break through so easily. It may just like hold on for some more time as well. This is Bitcoin, and this is just a micro futures for Bitcoin. So that's why you see a lot of gaps here. But for now, Bitcoin did move up to the 21,000 level. Did that. I think it did it a couple times in the last week or so. But this is it's kind of like hovering in this trajectory. It has pierced through the 50 period moving average line, and now it's holding that 50 period moving line as its support, which is a sign that okay, there is it has to now break through this level to head to its new low or the previous lows, which were around the 18,000 mark. What that means is that there is some strong support here for Bitcoin around the 20,000, and that's why you see it hovering so much in this area. So still nothing really to get into. I would not say get into it at any point right now. Just hold your horses. This is Ether. Same for Ether as well. Nothing really to talk about. It is very choppy in the sense that it's not really giving you the same direction that we would see in the past, where it would really spiral upwards and give you really good projections in good return for your investment in short periods of time. Lastly, I've got the treasury yield, the 10-year treasury yield, and it is in a really good bullish trend right now. So it's taking a break, touched the yellow, which is the 20 period moving average line, touched it again the second time, and these were the small bull trends that we've seen in the market, and now it's again going up. So it's interesting to see where this would head. Obviously, if you were trading the treasuries, you would have made some significant gains in the past few years. I would say maybe since the pandemic hit, it's been in a really good positive momentum. So yeah, this would be something to if you are interested in trading it, somewhere around the 20 period moving average line would be a good point. So I think that's all that I had to cover for today. So I hope this was helpful. Just a quick take on a few key future contracts that you would possibly want to look at, and also the S&P in general. If you are interested in a particular stock or a particular ETF, anything that you have as part of your portfolio that you like to go through or check and analyze the price action chart, I'd be happy to do so. And if otherwise, we'll see you in another video very soon. And happy trading and have a good day.